Welcome everybody, it's the Market Sniper. Glad to be with you. Just got the cap on to keep the sun out of my eyes, a little bit of an outdoor setting for you today. Want to give you a precious metals update. We're going to talk about gold. We're going to talk about why we're the biggest bull precious metals generally, why we are still and always have been a even bigger bull silver, and why platinum is our most bullish call. So let me get a shocker out there. Early we have said that platinum is the most undervalued precious metal of them all. People have said what, but what about silver? Silver's very undervalued, but platinum in our take is the most undervalued and will, in our opinion, return to a previous premium over gold, which, if you think what gold's already done, it's been as high as 3.5, it's trading in and around 360. To have a 30% odd premium, or even a 50%, it could have an overshoot of even higher. But to go into that typical historical range, you're going to be looking at current prices, you would need platinum at about 4,200 odd to gold. And our opinion is that's very fast going to change. So let's do the precious metals. I'm also going to do a teeny weeny, slightly, it feels like it's off topic, but in the same way it's part of the same thing. I'm going to do an update on the Swiss franc strength that we've been calling for. Particularly, we've highlighted the Swiss franc JPY. For those in our community that missed the entries on that or wanted to double up on the trade, we also provided the Swiss franc USD on a smaller setup, which has been in a lengthy big macro setup as well. So why are these things different, but at the same way a little bit correlated? This whole trade, in fact, everything you're going to be doing in the market that is currently paying us, we're having an amazing purple patch, by the way, a lot helped by platinum, a lot helped by the Swiss franc. So our FX trades are winning, our commodity trades are winning. We've even got winning cryptos, but that's on the crypto sniper at the moment. It's a dollar debasement story. This is a debt and dollar debasement story. Every YouTube, I'm going to keep hammering this home. People don't realize there's a lot of, and I love our US audience, I love all our audiences, but I have to say there's a segment, quite a meaty segment, of the US influencer market that is what are in what I call cope mode. You know, peak cope. This is my pet hate of saying things like we're the least dirty shirt in the laundry, the rest of the world is so wrecked, China's wrecked, you know, whenever something, their property market is worse than us, this is worse than non-stop. It's kind of like, we might be bad, but someone else is ugly. It's kind of like having a face like a slapped ass and pointing out that the other guy's got an even worse complexion than you. It's cope. It's a psychological reflex of cope. There's other people that are waiting for, the employment data to turn. Let me tell you, the employment data is awful. They're understating it. This is a liar system. This is an empire in decline which has lied for a long time. And as it gets further and further stretched, the lies need to be more outright. And more, they're forced to be even more obvious. You are in a recession. You probably bounced in and out of recession, not just once, but twice. You met the criteria already before. They used fake employment numbers to deny it. You're in a system where you should trust almost gut instinct over data. And that's very rare that I'll make a statement over that. But all the people, I await the data, I'm a scientist. I'm not going to go on hunches and shoot for. Actually, this is the environment where you should go on anecdotes and not trust the data, because there's very little honest that comes through in the state of the global economy. What most people don't realize, so let me just address the American maximalist before we deal with the precious metals and we do the Swiss franc as the most semi-serious fiat that will do the least bad. When you are the hegemon, you're on a 26-foot ladder. You're here by me. The United Kingdom, which is doing a terrible job, a very good job of destroying itself in and tying itself to the same mast, decided to be a slave nation to the death of empire of the United States. They're going to fall too, don't get me wrong, but they're going to fall too from a already lower ladder. It's like they're on a 4-step ladder. The US is on a 26-step ladder. You know, the one is 22 foot in the air, the other one. Europe, don't get me wrong, tons of things wrong with Europe. China, yeah, they've got a wrecked property market. Yeah, they've also done a whole bunch on debt. The differences are they aren't hegemons. They aren't hegemons. When you take the top seat at the top of the tower, you have the furthest to fall. And the extent of debt that has been proliferated is falsely stated when you take the unfunded liabilities. The downturn in living standards will be the harshest in the hegemon, always. And your American analysts, a large slice of them, and it's the mid-tier analysts. I don't want to start mentioning names and shaming. I've probably done already too much of that. I'm sometimes too direct, too aggressive. But actually the very top tier analysts are very, very worried, and they are talking a lot of truth. And not all of them are friends of yours. So, you know, Jamie Dimon, he's never been a friend of ours. He's actually starting to spill truth. Not your YouTuber mate that tells you how worse every other country is and it's still the best place. Warren Buffett, the big Captain America, he's stepping down and doesn't want to see the end of this movie. He's given you an example. You listen to Ray Dalio. Those guys are deeply concerned, and they barely masking the degree that they are sharing real fear for the trajectory for America, and why it will probably be a terrible period for living standards and quality of living. So the dollar maximalists, yes, the dollar's got immense utility all around the world. That's never been an argument. But in terms of where you are, dollar needs to devalue. You had Deutsche Bank saying for it just to get their trade deficit square, that means balancing imports and exports, they would have to have a 40% devaluation. You've just got a recent clip out of Besant that I feel I should almost find and play. So I feel like I've got macro fundamentals to deal with, debunking of cope and American maximalism. And it's not me wishing this on our American audience. It's don't buy the false hope. The hegemon falls hardest, falls from the tallest ladder. Always has been, always will be. You don't be in the center of the storm as a dying empire and say, my neighbors are going to get totally wrecked. Oh, you know, we're better off here. You know, I'm sorry, it doesn't carry. It simply doesn't carry. And this is going to reflect in the currency. You had the TLT due since our September call in 2020, better part of 55%. We'll have a look at that as a flyby as well. So there's so much I feel I need to call it, and there's so much BS. Watch out for those mid-tier YouTube guest, YouTube influencers that are telling you you're still so much better than the rest of the world. You might be the slightly better climber, you might be, but you're falling from a cliff face far higher up than your more useless mates that have their own issues, who are, you know, going to fall on their backs from 2 or 3 meters and get a little bit hurt. You're falling off a cliff face. So it's not good news for America, and it's not me selling fear to them. I appeared on Wealthy On with Maggie, lovely lady, smart lady, but I just read the comments and there's no, we won't. Sometimes on these videos, particularly to US audience, it's not going to happen like that. Everybody else worse off. There's so much cope. Actually, you really need to realize people have no concept of the debasement that currency is going to have to go through. The people based on dollar maximalism. So let's deal with the milkshakers. When we had rates go up and dollar go down, the whole basis of the dollar milkshake theory is surrounded on the fact that if rates go up, the dollar spikes with it. If money is being withdrawn, and you happen to have, by market cap in the world, the single largest accumulated market cap of all stock markets by a country mile to other nations, you already have hoarded the bulk of the world's capital. The only thing that probably happens is withdrawal out of your nation's capital markets in terms of equities and everything in the long term. And as you struggle and debase your currency, that has to be featured into the returns of your stock market and your bond market, for which the currency is one release valve on the geyser that's being heated up to explode. And what tends to happen is very volatile, very clearly debasing currencies and a very clearly debasing debt market, which are synonymous together, have a high volatility, further downgrades. So let's have a look at some of the fundamentals before we go into the metals. This is what gold's done, by the way, ahead of silver. Silver will play catch up. You can see the super spike that comes, but it's a fascinating chart. I wanted to just show you what we've been retweeting to capture with some of what's going on. There is Hong Kong funds. There's a lot of money caught up in Hong Kong. Plans to cut treasuries if the US loses its AAA score. So let's talk rating agencies and the fact that certain investment vehicles, pensions, etc., may not invest in debt that is not AAA by rating. It's in the mandate. It's a law. It's a function. It's like being, you know, you were previously 497 in this S&P 500 index, and you put in some bad earnings, and now you're 503, and they're about to re-weight the S&P 500. Your shares have to be sold, and the new guy that made it into the top 500 has to be bought. It's kind of like that. It's a force of the mathematics and the algo. It's the rule. That's what happens. And my advice or counsel, because this is non-advisory for anyone, but my counsel, if I was a Hong Kong fund that was looking at the US Treasury market, so we're looking at this tweet here, right here from bar chart, by the way, Hong Kong funds plan to cut treasuries if US loses AAA score. Now, you can wait till that happens, and you can all stampede out the door at the same time, get the worst fills, and be part of a contagion sell-off. Okay? Or maybe you clearly missed our first call in September 2020. The repeated calls through 21, 22, while everyone was going buy bonds, wear diamonds, it's a great dip to be bought. Then 23, when everyone was telling you about pivot, how the rates were going to go, chucking it all the way back down to zero, and you were suddenly going to be able to print again, not understanding that you can't print if no one else is going to buy that asset. And you're already in a situation where the Fed is doing a whole bunch of liquidity provision. So let's deal with that other point I've just raised. The Fed is providing liquidity for other people to get out. So you think by market cap, this is one of the hugest markets. The debt markets is one of the hugest markets. It's bigger than the stock market. But the crazy thing, it's huge by hyper overvalued debt that has not been downgraded. It is not liquid at its current spot price. What that means is, if you take all the debt that's been issued and you claim the current price as a value, what you get is a situation where you go market cap equals current valuation, etc., times by the amount issued. And you get this huge number. Well, the problem you have with that is that I can own a stock, 99%. It's a family stock. I'm the owner. I list 1% or 5% of it. And I allow it to trade, and I create some incredible news, and I throw some of my own personal wealth at pumping the price right the way up. But it trades in very low liquidity. But I push that share price to $1,000, and there's 1 billion shares in issues that are all issued at 1 cent. I can claim that I have $1,000 times the total number of shares as a market cap. Good luck me trying to sell where I am largely part of that market. And that's where Bank of Japan is. And the truth of the matter, it's where a lot of America and all debt is. Anybody who wants to sell and get out of debt, the Fed is having to provide liquidity for urgent, like the Californian pension fund that needed to make payments and couldn't. and was trying to sell at market without collapsing the market, not smashing the stack to the downside. Everyone was like, whoa, 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 don't sell, don't sell, don't sell. Here's what we'll do. We'll let you loan against your asset. But the asset isn't an asset if there's no liquidity for it to trade at that price. That's where you are on the debt market. If you're a Hong Kong fund, what should you be doing? Coming back to this article, you should front run the fact that it is going to get downgraded. There is no liquidity at the current prices at all for these instruments. There is no hunger for them. They are set on a trajectory of devaluation. Financial repression is the active act of devaluing an asset out of intent by virtue of devaluing the currency and creating a lot of inflation and seeing that asset go down in value in real terms and even nominal terms, so that you can deflate away your borrowings that you put on someone else. That asset you created for someone else to own when you borrowed, you want to now have to pay him back a whole bunch less. Kill the currency, kill the value of the asset, draw it out, use time and compound interest, and that is their intended game. So how do you not already forecast that the score should be, bearing in mind that the rating agencies are famous for lagging, famous for leaking so that they don't get beaten up by politicians, the fact that they're going to have to do this, apologizing to all the politicians and the Fed and kissing ass and etc., to say, hey, sorry guys, kind of, we're needing to do our job. It's about time we kind of mentioned that you're bust. But, you know, we'd rather we tell you first so that you don't get upset with us and, you know, get all angry like, and we got to notify you. There's so much leaking. How the hell, if you're in Hong Kong, are you going to wait to be the last man hearing this as the market has spent the 3 weeks before the announcement spilling? The only way is you recognize financial repression and you get out. In fact, the Fed may be providing liquidity for its own insider friends to get out and to put on short positions. JP Morgan, through Jamie Dimon, has already told you they're going to be fine. They're going to be just fine. This is the world of a key major alleged asset class. And I'm going to keep mining this theme because you don't realize how long this trend is. And when we look at the Swiss franc charts and I show you how the franc has continued to gain against the dollar, how we're in macro setups, we've done YouTube's 2-3 years ago highlighting macro inverted HVFs of devaluation for the dollar. And you're sitting with a milkshake guy telling you you're going to get a once-off spike. Well, that assumes that the money is not leaving America, because you've already had the instance we warned would happen, the Truss Kwasi-Kwarteng UK event, where the debt was sold off and the currency was sold off as money left the nation. And the one thing that America has been, it's been the asset manager shop for the creation of all the status surveillance tech unicorns. That has led to the Swiss National Bank turning into the equivalent of a hedge fund buying MAGA stock. That has led to money from all over the world being drawn into America. When that reverses, what do you think it does for the dollar? What do you think it does for those assets if the dollar starts to become too unstable because of crazy tariffs, major loss of living standards, loss of desirability, loss as an investment venue? We have highlighted on this channel and on our Reset channel, capital formation, technology is being transferred to the Middle East, Dubai, Qatar, the best airlines, the highest building. It's how they tell you where the next place will be. Who has the highest building today? It is a totem pole of insider indicator for where the ambition has gone to. Clean streets, no BS with crime, etc., etc. We've warned Singapore and the Middle East will become the new capital formation centers. It will dissipate slowly, and your American influencers on YouTube, not your top dogs who, being almost honest with you, many of them, even though, as I say, they were part of creating the problem in the case of Jamie Dimon, are warning you that this is end of empire, and the hegemon falls from the highest point and falls hardest. And don't let anyone tell you anything different. Okay, that's my rant and my swing of the bat at all the cope I'm seeing on X around China is wrecked, this is everybody else is ugly because you in trouble. It is a serious situation. Let's go and have a look at the charts and let's talk some more about what's going on in there. So gold right now. So gold We're a major bull on gold. We expect a lot more, but on this time frame, the daily time frame, it's quite likely that there'll be an extended period of range trade between the 3-1 and the 3-5 that was determined. I'm expecting some form of winding up structure. We've got a basing ascending grind line under there. That's not a trend. You are inside a range. People who talk about every line like this is a trend line are wrong. It's a grind line. It's a bit of price. It's almost like bot buying along relative lows, climbing up, but with no real power. So when there's no real drivers, you get a sort of an algo bot-based nibble along the bottom. I'm saying it as if it's only a technological phenomenon. It's existed before we had algoized buying, but it's people, generally late bulls, creeping on up. But you could actually have a pullback into range at some point like that, and you could have a winding up setup that could end up giving you your next interesting move. So trading wise, remember, we are investors in all three precious metals, and we've been stacking platinum like gangbusters recently, but we are long-term bulls, all of them. Right now, I am not a leverage long gold. In short, it's inside a range. I would be shocked, I wouldn't be shocked, but I'd be slightly surprised if it just out of the blue did that. That would be a contagion. Listen, there's lots of reasons why suddenly that could happen. There are lots of reasons why that suddenly could happen. 100%. We have dealt with a number of them right now in terms of what's going on in the world. America could just suddenly have a launch into a war. There could be a sudden surge in dollar debasement. A lot of things could happen. But my expectation right now is that you're going to be tightening inside the range that's already defined. You might be at a localized high right now. You could go a little bit higher. You could come up here, but I would expect it to be in the range a little bit longer to wind up. You had a real surge in valuation over there where you fell. I say price rather than valuation. I think it's still undervalued. You had 2,950s odd right the way up to 3,500. To get anywhere close to $500 in that short time frame, which, by the way, coincided with peak Trump tariff tantrum. Trump tariff tantrum, he says, the 3 T's. You saw the debt values drop, the rates spike, and the dollar sell off. The main assumption is always that dollar will climb on a sudden rate spikes. It can and it could. It doesn't necessarily always mean it will. If it is a loss of faith moment in America because of policies, because of warfare, because of collapse, banker contagion, the other thing we haven't heard near enough speak about is the collateral of banks in terms of what's been going on and the loss in that pristine collateral that is debt. It just hasn't been mentioned enough. But anyway, that's what I see for gold. So is it a leveraged long trade for me right now? No. Does it remain an investment hold, and will it be going up again at some point in the medium term? Yes. So that's where we are. Not super exciting, a bit of a squeezing. But remember, these times set up the next surge. We gave you the last time it did it with an upside HVF, and we said that's why we think you're going to be breaking up to the 3K level last time it happened. This was also not a particularly exciting period. You got sold off, you bounced, you stayed roughly in range, you did a little Batman ears there, you ground along, and then you broke out from the third high, and then you got a sustained strong move. You got another setup on a smaller time frame. We gave that. You get a sustained strong move. Then we got a little bit of volatility that came with the surge with the Trump tariff tantrum, and that was not good. And did we give that back? No, we had a pullback, but actually if you look at where we are today, we've kept 80% of that move. Very bullish. It means more to come. Just watch that basing ascending grind line. It probably points to some point that needing to go to be broken through, or for you to square up against it, as I've already indicated. That's your update on gold. So let's move it on and talk about the next part of the precious metals equation. Great to see silver get its running shoes on. We did a number of setups for you on lower time frames. These were smaller setups. We highlighted that, and this even smaller time frame, that, and said you're going to spit out of it. You got real overperformance. Those targets were made, and then you got a follow-through surge. We'll touch on the gold-silver ratio too in a minute as to what happened there, because I've got some thoughts on that. So if gold goes into a bit of a range trade, you could have let's go to that gold-silver ratio. A little bit of a pullback period on silver. We're coming back to platinum. So you got this breakdown. We had an inverted HVF. We said, look, it does look like it's downside for this, which is good for the overall precious metals category. Both platinum and silver have industrial components to it. Platinum is actually completely non-monetized as a metal, but it is very precious from a jewelry point of view. We'll touch on that as well in a bit. But what you have seen, let's deal with the gold-silver ratio. Let's get this whole guy through now. Let's get a bigger time frame. So what we warned was, listen, too many people are just going, one rejection after the 100 means it's all going to be silver dominance now. This is a bit like the Bitcoin dominance in the crypto markets that everybody's called a turn on, of which we were guilty of calling turn on too, and saying it's all going to be alts from here now, or they're going to be more dominant too soon. It's very easy to make the too soon call. This 90 level has been very interesting. You got rejected there, 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 and then you ground through it. You've only broken above it twice. That was for the CV19 events, and more recently Trump tariff tantrum, which drove the gold price. Big money drives the gold price. Okay, gold price has moved a lot. Everyone's taking a break. Okay, it's not giving up. The base case for it, it's typical of core trends. They keep on keeping on, and they have continuation patterns where they rest a bit because big moves have already happened. People have to get used to the new perception of their value. Okay, but we warn that what was a form of resistance on the 90 can turn also into a degree of support on the downside. So we said silver will run until we get back to the 90. We said that. We said it internally in our community first. I think we've mentioned it in a couple of YouTubes. Beware these orange boxes. You've seen them here every time I bring up the charts that I draw on here. It's a key level, the 90. What are you getting right now? You're getting a smackdown and a green candle. There's a couple of things that could happen here, and all remain open possibilities. If we just go into real contagion in the US, you could have a weak rally, get up to there, and you could just smash round through, and we keep on going down. Fabulous. I want to see the break of the 75. That's a key shoe to drop. And then the 65. Then I've shown the macro possibility of this all being a huge head and shoulder, which will see you run down to 30s, and we actually think you go single digits on silver. Yes, we've said it before, so below 10, it's possible. That doesn't mean you will. Okay, we're talking about the future here. We're talking about possibilities and probabilities. So that would be the most bullish case and the most immediate. But too many people resort to that every time. You might have thought after CV19 that we were going to go all the way down to 30 or 10 or 15 and all of that. Look what ended up happening. When we saw this structure over here, we warned that's upside continuation. That means gold dominance. Keep stacking the gold. That's exactly what happened. You crept up and you've gone above 100, and even now after a major correction, you are still higher. You are still higher than you were down here. So just watch. This time is the golden time. You cry wolf many, many times before you get it right. That's the key warning on silver. Could be. I'm not saying it isn't. I'm just saying the tendency will be for too many people. Have we really had the debt and dollar contagion event that is truly part of a collapse of empire? To me, no. To me, no. We've started to get the ructions. These are the early tremors of the earthquake. This is not the main event. This is too big. This is too large for you to be coexisting in the main event. Yes, you're in a long, ugly recession and have been dipping in and out probably a couple of times. Yes, it's going to get worse, in my opinion. So the main event hasn't showed up yet. The main event hasn't showed up. In the main event, what will the big banks do? They will not buy platinum and they will not buy silver. They will rush again into gold at any price. So you do have the continual possibility that at some point, in some way, you could settle down for a while here, and then you could have a ruction, and you could go high again. We continue to warn about this just because it's too crowded a room on the it's all about silver from here on in. Okay? We just warn. It's very rare that the 99% are right, actually. It's very, very rare. Eventually they will be. I'm just not ready to say it yet because the main event has not dropped in the macroeconomic right sizing on this debt experiment that is worldwide, interconnected like never before, despite this bifurcation. It's a scale you haven't seen. It's a scale you haven't seen. It hasn't happened yet. It's still coming. We've still got the CV19 name tag drop event that's due to come. Okay, so that's my take. I still bias that you'll bounce around a bit here. You can go up. That doesn't mean you have to make a new high. The setup we drew still holds. It only is invalidated. So we drew a setup like this and said, careful now. You may have broken up out of the setup. When does that invalidate? The 90 is our funnel. Here, we gave this precise value. You break down and you fall through here, you've negated the upside pattern. That is your squeeze for any potential upside. Don't forget, this triggered and broke just as it should on our funnel to the upside, and it's quite typical of a return to have a return move. Okay, so they had the tantrum, and then they went back to calm, make nice. Oh, everything's okay. No, it isn't. Nothing's been dealt with. Nothing's okay. We looked into the abyss and we stood back. That's all. But you got to go into the abyss. You're on a conveyor belt dumping you into the abyss. There's no way through this. You go through the abyss. That means you're walking this journey. Okay, there's no reversal. Okay, couple of thoughts there for you on gold-silver ratio. Okay, now let's move back on to platinum. Now, we've said a couple of times that it is the most undervalued metal. It is the most undervalued metal. What silver didn't experience, that platinum did, was a substitution effect where essentially platinum is precious metals, which is bullion, jewelry, particularly, and the US doesn't necessarily see this as much as people that are international. The Asians, the East loves platinum. They love white precious metals. So because of maybe complexion, you can choose to have yellow, which will maybe make you look more yellow, or you can choose white metals. The preference, this is just how it is for white metals. Certain colorings prefer white metals. But silver tarnishes. Silver is not anywhere near as unique as platinum is in many, many ways. Platinum is harder. It doesn't tarnish. It is the true white gold. White gold has become possible, has become popular and has always been popular in Asia. But now you have a platinum, which is a white gold plus. That is actually undervalued to gold immensely, because it had the better part of 2 decades since this high. 2008 was brutal to platinum. It did get a snapback V rally, only to get squashed with the industrialization against diesel engines. This double decade, it's even beyond 20 years, was just crushing for platinum. Palladium during this period absolutely shot, because it all became about hybrids and petrol engines for catalytic converters. Rhodium shot. I've shown that chart again. I might dig it up again. And it was all at the cost of platinum. However, platinum is completely unique. It is completely unique and super rare. I can't get Grok or anybody to give me a true answer. But in terms of the scarcity, I've repeated, maybe incorrectly, because I keep getting different, anywhere between twice as rare to 20 times, and sometimes 30 times as rare as gold. Now, if you just look at the tonnage that comes out, you're looking at 180 tons. Let's go and have a look at Grok. We'll come back to the technical answers in a bit. Let's make sure we got the right one. clean our face. This is platinum. 180 tons is the approximate 2023 production, of which 120 come out of this country I'm sitting in, South Africa. 66.7, 2/3 is 120 tons. 23 out of Russia, the next largest. The rest of the world is 20%. 20%. And the Chinese are aware. The East generally is aware. They like white precious metals. White gold has a bit of, I think it's silver, maybe mixed in into it. They are, or they can buy platinum on a discount, which all our long trades on platinum are sub $1,000. We bought it at $990. The thing has gone up nearly 40% plus since the absolute lows, but over 33% on our trades leverage. It is the most undervalued. It's shot the most, and it's looking the least like a rest. And it is a thin market. So a thin market is good and bad. It's bad when you're on the wrong side of it and you have to get out, and you have big size. In a runaway, hyper undervalued environment, a thin market means no supply, bud. If you really need it, you need to bid a whole bunch higher. You need to coerce people to come into the market to provide. What has that platinum chart done? That platinum chart for 2 decades, underinvestment, undervaluation, no desire in new finds, rare as hen teeth. Russia and South Africa, between them, are 143 tons of the 180. The rest of the world does 37 tons of 180 tons. Now go see how much gold comes out. Let me just take that question out that I was preparing it and do this with me. Now, I'm not going to put Grok as the expert of final resort. This is cigarette, back of the cigarette box, approximate gold total mine in the same year as we gave you on 2023. Of course, it wants to give me every little detail, just the total. Don't make me read, don't make me add. Don't make me spell. Do the maths. 3,000. So, join me in doing the mathematics. Call it 200 metric tons. Let's get a calculator. Stay with 180. 3,000. There are 16 2/3 gold ounces found for every 1 ounce. So I don't think the 20 was that far wrong in terms of production. Now, I can't answer how much is above ground, how much is held, how much is stored in jewelry, bullion, etc., but a platinum is super unique. So let's go back to those charts, and let's also, just before we leave Grok, highlight, and I don't recall them all so well, highlight the key beneficial attributes of platinum versus, say, silver. Don't get me wrong, guys, the silver market is greatly undervalued and has been manipulated and has huge industrial uses. But what is driving precious metals right now? Is this a booming economy and its industrial use? Or is it the fact that we are having a debt-based collapse? People first moved into gold, and gold on its bungee cord to silver and the other precious metals in terms of relative valuation has gone really high, really fast. Remember that tweet I showed you with the gold versus silver chart? That now people are looking at the potential monetary or preservative value of platinum and silver relative to gold, and they now look relatively cheap. Is it solar panel companies that have bought silver up? To a degree, some element, but is it really the gold-silver ratio being above 100, the relative valuations being really extended? Is it the fact, suddenly people buying diesel engine cars that is driving platinum up? Or is it the fact that as a relatively valued metal to gold, and we've shown this on a massive falling wedge, and I will bring that chart in again, that you're just beginning to break out on the relative valuation after decades of devaluation for platinum. That's where we are, and that's why we are super platinum bulls. Durability and strength. Platinum is extremely durable, highly resistant to wear, tarnish, and corrosion. Silver is softer, prone to scratching and tarnish. Rarity, much rarer, 180 tons versus 26,000. So let me just say 200 to 26,000. So you have 2 to 260. You have 1 to 130. 1 ounce of platinum to 130. Now you're a wealthy Chinese guy, Asian, Korean, or whatever the case may be. You want a white metal. And nobody will know. No one will look and know. So you can even fly under the radar. They'll think it's silver. But if you want to tell them, you can. You can have the metal that is 130 times more scarce, stores more value in a smaller space. Critical in catalytic converters, fuel cells, chemical processing, due to high corrosive resistance and catalytic properties. Used in high-tech industries like electronics and medical devices. Silver has excellent conductivity, that's for sure. Platinum, naturally hypoallergenic, ideal for sensitive skin and jewelry. So when I wear a silver pendant, it rubs on my skin and I often get, spots or something like that. Platinum doesn't do that. Platinum, brighter, whiter sheen with a premium luxurious appeal. Shiny but dulls over time. So silver dulls. Denser, 21.45 versus 10.49. That's this weight and the substance to it. Okay, so platinum is the thing. It is an unbelievable metal. And my entire years, and I keep mentioning this, that I was young growing up and watching shares. We were always about gold shares in South Africa, and platinum, we'd get told the platinum price. It's always traded at a premium. Let's go back to the platinum chart again. So you actually had, from the rebound high, but certainly probably beginning 2008, you've actually had 2 decades of complete disrespect for platinum and undervaluation. You've got to remember, throughout this period, quantitative easing was taking place, increase in debt, increase in dollars in circulation, increase in lending, bubbles of homes, bubbles of tech stocks, bubbles of absolutely everything, and this went down in nominal terms and actually traded 500 and probably 65, 70 odd dollars at one point. You broke out of this falling wedge technically, and you set up this weekly setup. Now I want to make something clear. We've been watching and talking about platinum for ages. I've been talking about this setup for ages because it shows up on the weekly chart. We are right here on the monthly chart to bring you all that additional history. When this was 2,300, gold had never even traded near to 2,000 during that period. It actually false. 1927 was the high, and that was 2011. That was here. Platinum never made a new high. That had already changed. So during that period, 1927 was the 2011 high. In 2008, I would love to see the gold price. I'm going to pull it up in a second on that time frame. Let's answer the question. Where was it when gold was 2,000, when platinum was 2,300? Where was gold in 2008? Gold was over here, guys. Somewhere in this mix of 2,000. 875. 875. It literally is role reversal. It is literally the multiple role reversal. So going back to the platinum chart, this weekly setup. So I also want to highlight that you don't get perfection in trading. We've actually been talking about this in the community, the platinum setup, for a long time. We first thought maybe this would be the breakout. So I've already been cried wolf on this. We were here and we were saying that's the breakout. Then it feigned back in. We were holding trades going nowhere, holding trades going nowhere. I got washed out on stops there on that down sell-off. It's classic. The final, they always shake you out on the bottom only to put you back in. I ended up buying back in there. So I got washed out on a stop there. It's a trading loss, and it's quite standard. It's quite standard on your winning trades. You have to have conviction in terms of what's likely to happen to a very great degree to keep showing up and getting a kick in the backside. It wasn't that many times, but it was that time. That once was a eat, and then go and put it back on. You feel almost butthurt. It's kind of like asking the girl who rejected you again for a date. It's just not something you want to do. You think you're going to get another kick in the backside. And once it moves, and that was a key technical break, and it was crossing the funnel with far more momentum. I've used the draw tool in other videos. The targets are well known that we expect to have it run for this pattern, but here's where the HVF theory comes in. The first setup in a new trend is a reversal, and much like a head and shoulders that has a target, that's just a resting point on what's likely to be an entire new trend of great duration. Great duration. Let's just leave it there at great duration. So you got a washout, the final washout before the move up. Very, very typical of markets performances and what's going on generally in technical aspects as well as fundamental. So you get a washout, you get some super bearish news, flush, 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 get everybody out, and it worked. I should have had a stop down there. I wanted to be a bit tighter. You often have multiple entries on a trade. We got in a second time after being washed out on that, and we stuck with a course. Now you get your break. Now, if I go to a daily and have a look at the platinum chart, this looks less like it's resting, even though there has been some fight back. There was some real blow off. That was beautiful broadening structure continuation there, by the way, at the 1079. Again here, that's when you left the $1,000. You are now right up at 1289. If you take this from the lows, the washout lows, and we had a similar washout low in silver, by the way, in all the precious metals, but it showed up on silver too. And I'm going to show you the underperformance. I put up that platinum will overperform, and I get everybody going, no, silver's the most undervalued. No, silver's the most undervalued. You go look at the last 20 years. You go back to 2005 and you look at the price performance chart. I've done it. I've shared it at Twitter. I've shown it on a YouTube. I don't have to show everything again every single time. You might be a first-time viewer. Follow an X. Go have a look at it. It is absolute devaluation for platinum. Absolute, utter devaluation. For its scarcity, for its price, it has huge potential to do the most insane multiple and to go back up to being 30, 40, 50%. It could even go twice. It's been 2.5 times. You saw gold was at 875 and platinum was at 2,300. Tell me what that is. It's almost a 3. It's almost 3. It's a 2.5 time multiple. It can get scary big numbers for platinum. This is again a dollar debasement, debt debasement story. And the dollar is the weakest, and we'll be coming to the Swiss franc and the fiat assessments in a minute. That is 43.7% since April. We're sitting here in June and it's gone up 43%. That is the 7th of April. You had all of April and May and half of June. So you've had 2.5 months. You've done 44%. What does the silver look like on the same time frame? So that was a daily chart. Great. And still I'm super bullish, but just for those that'll say silver's the most undervalued, right here, right now, 26.77. Awesome performance. Please understand, macro upside, divide by the CPI, the all urban inflation rate, the liar number, all those same things still applying, still good, still baked in, super bull, silver, but platinum's your boy. And it is showing by relative overperformance right now. And how many times I say, when the race starts, the one that puts in the biggest earlier moves, and this is the industrial metals race start. Gold had already started long time before. He's the king. Everybody can't get up until the king gets up from his chair. He moves first, but he's an old man. He can't sprint quite like he used to. Okay, but he'll shock you. He's going to shock a lot of people, mainly on account of the dollar doing such a good job of debasement. Okay, so that's the big story, and we're super bullish. All the precious metals, particularly platinum, silver, and gold. Don't be too soon on calling. This one is absolutely guaranteed. I start to say very seriously at 75 and 65, you don't even want to stack gold anymore. You just want to stack silver and platinum on the gold-silver ratio. Watch out though. real contagion. What will the central banks buy? The big money moves big markets. People say, yeah, it's such a big market cap now, gold. It takes so much money to move it. 23 trillion. I'm going, go work out the true size of the debt market and how much percent people are holding gold right now. If investors, mainstream, taxi drivers start talking about their gold holdings, that's when you'll know. If hedge funds start to actually have 5, 10, 15%, not 0 or 0.5 or 1. We did a previous YouTube where the highest was 2%, the average was 1, and many were 0.5 or nothing. In terms of asset management allocations into gold, they don't even think about silver and platinum right now. So people will be shocked. There's so much more to come in from the sidelines. Okay, let's go to the Swiss franc trade. So why is this interesting? Well, the Swiss franc is a country that holds a fair amount of gold, first of all. They have a problem. Europeans want to hold francs. They kind of a semi-serious government. Well, they used to. There's no good politicians out there anymore. But of the fiats, it's the least bad. This is the Swiss franc against the Japanese yen. We've covered this in the previous video, all the macros. So go and watch that. It's our overall opinion that you've been in a bit of a falling wedge recently. This is on the monthly time frame here that you're breaking out over there. We had the big pullback of August with the yen wobble. You've had a 3 impulse in this falling wedge, which is typical, and you've broken out. So it's our expectation that you will not only be bypassing this, but you'll be making new highs on the franc versus the yen. We also mentioned why the yen could indeed need to weaken on account of the weakness in the dollar. So we'll also be looking at the Swiss franc dollar with you. We showed you setups on the weekly chart. So let's clear our face up a bit and draw that. We showed you, and that this was also a squeeze within a squeeze right there. A setup within a setup, and then we showed you there was an even smaller one right here to break you into this new territory as part and parcel of new upside. Now, 19th of June, expectation, I think that's 7 days from now, of a rate cut from the Swiss, which is largely already expected. How does the dollar look relative to this? Well, we've got the dollar against the yen, and we've got the dollar against the Swiss franc, and we'll be showing you both. Let's go to the Swiss franc first. So we gave inside the community a couple of FX smaller time frame trades. We said that one's going to serve you pretty well. This is going to be a Swiss franc bull move. Note that I've put it like this, SHFUSD, for people to see it. Some things are easier to see upside down. That's called bull bias, by the way. We look at our charts both the right way around and upside down. I'm going to be showing you the same chart the right way around in a minute, but that's a great little fractal. Note how you get the break, you get the return move. You need to have your stops safe. You don't trail them. This is the value of HVF method, by the way. You want to find out how to utilize HVF method, click the link below and you'll see how we trade utilizing HVF method. This is a major move to the upside, and I'm expecting new lows, in this case highs, for the relative value of the Swiss franc against the dollar. That is on a 4 hourly. We can also just show you how it looks on the bigger time frames. That's a monthly, and you'll be seeing this soon now, the normal way around, the way you're used to seeing a chart. And those that like cups or rounded bottoms, that's what you're getting. And there's been plenty of those on the precious metals, and you've seen how those turn out. Quite skittish here. I'm not sure which broker we got here. That's ICE. Quite skittish as well recently. I think there might be some bad data points in some of that as well. But this is pretty much working towards a more dominant Swiss franc. If you're forced to hold fiat, this is the message out of all of this. A, we're trading this to make profits. It's working very well. But if you're forced to hold some fiat, maybe don't hold dollars. You could choose to hold Swiss franc if you have facilities like that available. If you need to find out how we do that as part of our helping you build wealth during reset season, helping you to preserve that wealth and continue to build on top of it and preserve that and secure freedoms through optionality. You might be our guy. Click the link below and book a call. So let's show you the Swiss franc in the more normally array round basis, which is the USD Swiss franc. You can see these big spikes already in existence. Let's see, that was the one that I did. Let's clean our face. There we go. So this has been a macro inverted HVF, which is downside for the dollar. All these people that are so bullish the dollar are doing you a disservice generally. To hang around for the possibility that on a rate spike, a debt-based collapse, the currency will go up, may go up, are very, very dangerous. Because if you're getting a debt-based collapse and the debt is in contagion and the rates are spiking, it could also mean the money is flight capital and leaving your shores, which means the dollar gets sold. It gets sold to go to Singapore. It gets sold to go to Switzerland. It gets sold to go to Dubai, Qatar, and get buried, put in one of those Mac mansions in Sandland. Because there's less crime, there's more law and order, and you go be part of the fork in the chains, bread and circuses society in the desert. Go, no long-term solution, but I can tell you the tech is being transported. Those are no longer solely oil nations. They've been using their bequest, and the American advantages are being sold off to these other nations. They are being sold off to these other nations. This is the inverted HVF. Let's show it to you how it looks, because you're probably just seeing a mess. It's confusing. So that is your big first impulse. It's quite a messy setup. Big first impulse. Huge slip there, by the way. We'd drawn that. We saw that. Another squeeze. When you gave up, you guessed it, the parity level. You see the blue line, number 1. You gave up that parity. You have not been able to meaningfully hold it. That's what we call iceberging. Tiny little snippets above that can't be held. This is real iceberging above the 1 level. You tried, and you could not retain parity against the Swiss franc. You fell back. Then you came up one more time with a channel, a channel with a basing ascending grind line. It's not a trend. It's not a trend. It's a short-term grind up. It's not so short because we're looking at a big time frame chart, but it's a grind within a range. So you don't call it the trend. The trend is that. That's your macro trend. This is continuation pattern, whereafter a major resumption of downside is to occur. This is the fate of the dollar, guys. This is the fate of your dollar. And that's, your income is not going to go up enough. And your costs are. This is why hegemon has the greatest loss of standard of living. Then you had, coming out of there, after once again iceberging ever so small out of the blue lines there, you had a dip down to here and a very small bounce. Since then, you have been in a breakout to the downside. That's our HVF draw. That's your stop placement. That is the next target, 6322. We've had this target for ages. What have you done? You put in a big old broadening structure, which is wanting a lot of volatility, wanting to find a base and can't, and you're softening again. We have a second interim there. When you run that, you might get a bit of a dollar rally, but expect the debt to be selling off. On the TLT, you might want to be short again there. So we're expecting a run through that. Thereafter, you might get a little bit of a move in the other direction. That's the value of HVF. The interims give you points where you could have progress decay. Then longer run, we expect that to be run to the downside. This is the same methodology we used on the Euro Swiss franc in 2009 that saw us call the Greek crisis before it was even known what the name was for the crisis. In the same way for oil, before it was known that it was CV19. All those things were utilized using HVF method continuation patterns on macro trends. This is a bear trend. This is a currency in collapse. I can't say it enough. It is a currency in collapse, and it's the pricing structure for all commodities. So, couple of news break. Let's give the charts a break. News update, alert. Von der Leyen talking about 5 billion being invested in South Africa. They suddenly care so much about South Africa. Real BBC article. Zelensky came and bought fifth controlling stake in Northern Platts here in South Africa. The US having real talks with Cyril Ramaphosa behind closed doors regarding minerals. G6 planes and other Learjets with infrared scanning tools sponsored by NASA, which is basically dark state, are flying flights and grids over this country again, South Africa. One of the most mineral rich nations, 75% of the platinum production inside these borders. You include Zimbabwe and a bit of the south of that, you're talking over 80+% of all platinum in the entire world. Russia just into double digits, the rest a rounding error. They're flying flights and scanning for minerals with specialized infrared plane-based kit. Don't even ask me, I don't understand. But they're looking. And then you have the laws for farms being appropriated without compensation. Especially, my friends, if they have mineral rights. There is a commodity charge they don't want you to know is a commodity charge because there's a fiat-based collapse. Because the things that go up are the things that don't go down. They're the things that will hold their value in an environment where every fiat will go down. It's not just a dollar-based collapse. It's going to be the worst and the hardest on the hegemon. But there's a fiat-based collapse. There's a debt-based collapse. They can't not happen together. And physical things. And they're pushing you into the digital world and telling you Bitcoin is going to be what saves you. Trust us. We can just pump this magic token in the ether and all of that. And we're going to give you CBDCs. Behind the scenes, Europe, America, Trump, who wants Greenland and Canada not so long ago. It's all about physical assets. In a fiat and debt-based failure, this is a commodity run. It's a general commodity run. We've given trades on cocoa, Arabica, coffee, as well on softs and other things, but specifically the precious metals, the reserve assets, and real physical things. And they want you to have a token on any of your physical assets. Okay, that's where we're at on that. This is a downside move. We expect to see the second interim run, 79,824 on the USD Swiss franc. This is on a big time frame. It's the monthly. This is a bear market call that says every continuation is a downside break. Look at your basing ascending grind line there. Look at that beautiful squeezy. Look at that one. Look at that massive move. Wow, that was unbelievably big. That was the peg fail on Euroland that we called twice. We called before. We said the 2015 peg will break before it happened. Literally the next, we did it within 10-15 days. We had an appearance on Tips TV where it collapsed thereafter. And prior to that, in 2009 for the 2010 Greek crisis. This is debt-based devaluation, fiat destruction. You should do like they do. Physical things, particularly start with reserve asset-based precious metals. That is it. It is not industrial demand pushing up platinum. They are not churning out tons of diesel cars that need catalytic converters. It is preservation of wealth on a relative valuation basis. The scarcity of platinum and the energy required to get it, find it, and how much you get is so distorted. The final chart, we have to leave you on this platinum theme, and we'll leave our good currency trade now, is the XPT USD platinum divided by the gold to show you the macro hyper undervaluation of the two. So for those that say silver is the most undervalued, I show you this chart over the last 20 years. We go straight out of log into a regular scale. Normally I use a log scale for very, very long term. It's just so extreme and difficult to chart. So I'm doing a standard scale here. It's not typical practice. This is platinum divided by gold. This on a regular scale basis. Normally, as I say, I prefer to use on long time frame log scale to get the percentage move. But so think of it more in a nominal sense. You have just broken probably the biggest multi-generational falling wedge. Technically, we put splitters in. That is your aggregate rate of descent. You've had huge spills in that and minor rallies, but you've actually been in the ground floor for most of this move. Then there was a relative support level. You popped into there and you've been grinding lower. It's been a bleed out and loss of value for platinum. And I want to highlight to you 2.4. You needed 2.4 gold ounces to get you a single platinum ounce. Today it's 0.369 and just beginning a move that I think will shock the world. So platinum is your macro bull, not the Swiss franc. We're bullish this franc amongst fiats. Gold is a bull, silver's a major bull, still to happen. They are all still to happen, much more. Platinum is king in our view. Okay, thanks for checking us out. Book a call on the link below. Hit the like button and share and subscribe. We're trying to keep you updated from all places in the world where you can live an amazing life, secure as many freedoms, have optionality, build wealth, and protect your wealth. We look at doing all of that. HVF method is unique to us. You cannot get it anywhere else. And the charting and our updates on an ongoing basis will put you in a better place to exploit a series of long-standing trends that most people will exit too soon. The scale of what's coming is far larger than most realize. Till next time, I catch you later. Thanks for watching. Goodbye.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.